Hi folks, welcome back to my channel, Finnyfella Trader. I just thought I'd take you through the trade I've done today. The date is the 6th of December, or sorry, the 7th of December 2022. And as usual, I'm trading British pound US dollar. Yesterday, I was telling people in my last video that I was believing the market was going to come down into this 50% equilibrium. So if anyone doesn't know this range, so from this candle's low to this candle's high, 50%, which was lining up with, I'll just go in a bit closer, with this fair value gap between this candle's low and this candle's high. So I originally thought that the market would come down into that area before punching through this high over here. Now, I do have this marked out here just in case the market was going to come down any further, and I was going to wait for a reaction of this, which is the daily order block. Now, yes, it starts from up here, but sometimes I like to take the lowest point, I guess, just to give me an idea of how deep it could go before I admit that I may be wrong and the market heads off in a different direction. But as mentioned, the market came down in this 50% equilibrium of this range from this low to this high, and it's reacted off nicely. Now, again, I'm only easing back into the market, so I'm not looking big trades right now. Like to me, like a 3-1 or even a 2-1 right now would be a big trade. So really, I'm just trying to ease my way in to 1-to-1 trades and slowly build my account along with my confidence. So I'll just go down to the 4 hour and give us a look at what I was looking at. So as you can see, again, this is just the daily order block, which I think I'm going to remove now. I don't believe the market's going to come down in that yet. If it does, if it breaks these lows here, then yes, I will put that daily order block back on. But here is the 50% equilibrium. The market did come down and tap into that, and it took out the sell side liquidity that I had marked up. Now on the next one, you'll see a buy side liquidity marked up here. So I was looking for this to take out this sell side liquidity, which if you take a closer look, the 50% equilibrium also lines up with a fair value gap. I'll just mark that out just so you can see it. Tidy it up a wee bit. So it almost come down in nicely, filled the entire fair value gap up before actually reacting and going long. Now, coming down into the 1 hour, as you can see, sorry about that. As you can see, the buy side liquidity for me is here. There's relative equal highs here and also here. So I was thinking when the market comes down, takes out this and all this buy side liquidity here, or sell side liquidity, should I say, I was looking for a reaction off this 50% equilibrium that we've marked out and into the fair value gap. And of course, it's all right having price line up, but it must line up with time. So this is my London kill zone, New York kill zone, and London close kill zone, which I don't really trade that often. I really like the New York kill zone, but I always keep it marked out to see if I can, see if I can see patterns happening there as well. So just gives me an idea. I'm just sitting watching it like a movie, to be honest with you. So I'll just go down in the 15 minutes. This is where I really start breaking things down. As you can see, this is equal lows in these two candles here. fair value gap that was marked out. I don't need it on anymore. We know it's there. And buy side liquidity here, also here, and definitely up here. So my eyes, the market is definitely going to come up to take this out, I believe. So once this sell side liquidity was taken out along this lines, I didn't react immediately after this because it's not in the time zone I want to enter a trade. And this happened in the Asia session. And then when I get into the London kill zone, it did push up and it pushed up again. So the market broke this high and it broke this high. So that gave me an indication that, and with this as well, also broke, all these highs with this push here. So I thought I'm going to leave it till the New York hill zone and see if I can find an entry there. So I'll just go down to the 5 minutes. 5 minute, as you can see, this is the London session. We had the push up, broke these highs after taking out these lows over here. Sell side liquidity. The market came back and it reacted lovely. It came off this 50% equilibrium, really nice. Pushed through this line here, which is the new midnight New York, and that gave me an indication that maybe we will see the market go long now and take out all the buy side liquidity. Remembering that this is down into fair value gap, 50% equilibrium, and that's ultimately where you're going to line things up with the time, with the price, and understand what the market's telling you that you should maybe do, or at least enter. So I did see this fair value gap here in the 15 minute, but this is a 7 a.m. New York time. And yes, it probably should have been my entry. So if I take this fib, it all lines up. It's a lovely entry, but I just kind of like to wait till around. I'll just mark this out just for an indication. So I like 8 o'clock and I also like 8:30. So as you can see, the market pushed up, broke this high, and at 8 o'clock, the New York opening, in my eyes, it retraced down a little. And for me, that is telling me that this is the suck-in sellers. These move here in these 5 minute candles, I believe, is the suck-in sellers. So I just thought I'd leave it to 8:30, which is this line here, and I would look for an entry long if it gives me a solid indication that I'm going to see at least a short term push bullish. So I'll go down to the 1 minute, and just to give you a closer look, again, 8 o'clock, the 8:30. And you can see in the 8:30 there was a really good push in the market. It broke this structure in the market, this high and this high, and it didn't make a lower low. So for me, that was an indication that this is telling me, right, the market is going to go long. So I'll just take away what I've actually hidden here. Let's see. Okay, so this fair value gap, this candle on the 8:30 pushed up, printed this fair value gap forcefully, and I was saying to myself, right, I'm going to look, and I'll actually just put the position on just so you can completely see, because I'm not that brilliant at explaining things, but I hope I'm making sense to people, and anybody is interested in what I see from my learnings from ICT, maybe I can help. Um, So when this printed this fair value gap on this candle, and the market retraced back into here, that's when I took my entry for a 1-to-1 trade. Again, my usual 20 pips stop loss and my 20 pip target. And I would usually like to do more, but I say I'm kind of easing myself back in this week, so I don't want to get overexcited or cocky. So for me, I just thought this is what I'm going to do, 1-to-1. And also another reason, just quickly, why I done a 1-to-1 is here is a fair value gap here. We have a big fair value gap there. I don't know what the market's going to really do in that instance, not fair value gap. I could just steam through it and take out this buy side liquidity up here, but I'm not really willing to chance it unless I feel really confident that I know, you know, we're going to see a 2-to-1 trade at least. Then I'll make it a bit bigger, but right now 1-to-1 to me is fine. So going back into the 1 minute, as soon as I entered, the market pushed up nicely. Now it did fluctuate a bit here. I was thinking at least it's going to take out this buy side liquidity. 1-to-one's my best effort today, and that is ultimately where I entered the trade and why I entered the trade. So going back to the 1 minute, this is the London Open. We've come back into the 50% equilibrium. There's the New York Midnight Open. We've fluctuated below it. We've seen a lovely push up on the market coming back down just before the London kill zone was closed for me and into this fair value gap here, if you can notice it, and just broke this high lovely, continued up. This run down into the New York Open gave me an idea that I probably could have entered here, but at 7 o'clock in the morning it's just a wee bit too early for me. I like to leave it a little bit longer just to for supposed to build the confidence in myself to know that yes, the chance the market going where I believe it's going to go is high. So again, the 8 o'clock, I don't want to ramble on. Just want to make it, you know, just to let people see what I was doing. So this is where the market run up into the 8. As soon as the New York opened, the market started coming back down, and that gave me the indication that this could be a Judas swing, as they talk about. And I'm just going to wait. I'm just going to leave it to half 8 and let's see what happens. So the Judas swing happened. There's also a fair value gap in here. As soon as the market broke this structure, broke this high on the half 8, that's ultimately when I decided that I was going to look for fair value gap, look for my entry. As soon as that printed, I marked it up. And when the market come down into here, actually with the spread, it should have been around here, but the spread had me up here, so is what it is. Went 1-to-1, and the trade lasted all but let's say about it's kind of counts 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes, and that was another 1% trade. Just to show you, I'll put this on settings, executions. There's the execution and the exit. 1-to-1, and we'll go to the paper trading. So you can see here, this is today's trade, 7th to the 12th, 2022, another 1%. Ultimately from 70,000 up to 7541722. That is roughly 7.7% profit in, let's say, 3 weeks trading. So in some prop firms, another 0.3%. That's the challenge passed, which gives me a nice wee confidence booster. Not getting cocky, just confidence booster that I am in the right direction. I'm not losing massive. I'm happy with these wee strings of losses and strings of wins. It's for me, it's all about money management and risk management, as I talk about, which is really important. Like, you don't realize how important it is at the beginning of your trading journey, but you certainly realize how important it is the further you go into it, because you have like, this is disheartening. These amount of losses, although this is very tiny, it's still disheartening. Still, all you can see, you're not looking at $2.50 or £2 53 pence of a loss. All you can see is the rate, and that can knock you off. You know, here, basically 3% lost. From all these wins, and it can rock your confidence a bit. But you have to stick to your game. You have to just practice the edge, or what your edge is, and continue with it. Don't just give it up because you have 3, 4 losses in a row, because you might have an edge, but you might not actually be playing that edge correctly. You might be veering off your not being disciplined, not doing what your edge is telling you to do. So you're not ultimately getting the full picture of, does this edge work, yes or no. And you have to be completely honest with yourself when you're trading. Like, if you did not stick to your edge, be honest with yourself. You know, these are the things you have to sort out, and the things I have to sort out. So it's it is a long, lonely, and hard road, and there's nobody can do it but you. So you're figuring out the market, and you're actually figuring out yourself, which is probably the bigger puzzle. Because you know what to do. When you find a way of doing something and you know what to do, then you have to learn to become disciplined and listen to your intuition when it's telling you no and when it's telling you yes, and be willing to take that risk. Because this is paper trading. Like, you can see it up here. Don't be afraid to lose in paper trading. Like, but you have to treat it like it's a real account, because if you don't, then the discipline slips, and you don't get the full picture of, does this or does this not work. But yeah, that is my trade done for the day. I know it's only a 1-to-1, and people are probably frowning that, and people's looking for these big 10-to-1 trades or 5-to-1 and all that there. And I do believe them days will come for me and for you, if you stick at it. But that's the thing, you have to stick at it. You can't just expect to be hitting 10-to-1 trades right off the bat. And even 5-to-1, like 3-to-1 to me is amazing. Like, I just love 3-to-1 trades. So it's a gradual thing. It's like, you have to build yourself up, and as you go along, you get better and you learn more, and then your confidence to hold up a trade, becomes second nature. Like, I guess I probably could have. Would I have got a 2-to-1 there? Yes, I would have got a 2-to-1 there. But I'm not. I'm not kicking myself about that. I don't really care. I'm glad I got the 1-to-1. I'm not. I don't have FOMO, fear of missing out, that I didn't hold on, or I could have got more. And like yesterday, where is my trade yesterday? So yesterday, I signed out here, and I could have had, just to give you an idea. I could have went for these lows here. This is what I wanted to take out, and had a, just over a 3-to-1 trade, really, 3.5 trade. But what's the point in thinking that way? Like, I'm just happy to be consistent more than anything. So I'll leave it at that, folks. I hope it helped you. I hope, just by going through these videos and seeing how I'm learning to trade, you're maybe getting a bit of something out of this here. And maybe you're going to say to yourself, well, you know what, I'm going to record my trades, record a video as well, because it'll help me install what I need in my brain of when to go in and when to not, and what to reach for, and how often it works out. I think it's a great way to journal, as we all talk about. So I'll leave it there, folks. Thanks very much. Have a great week. If there's a trade on tomorrow, of course, win or lose, I'll be back on. And yeah, take care of yourselves and chat and see you soon. Cheerio.